Yeah, um, hello. So welcome to the second video of this course, or the free course here. There. So today we're going to be talking about swing points. Now I know I'm trying to build a foundation. I know some of you might not really bother watching or staying long on this video, but it's kind of very important because the way I identify my own swing points is kind of different from what you might know or what you might have learned in the past. So for me personally, my swing points are very defined. I don't use make use of an indicator to help me identify swing points. Neither do I make use of one stuff to actually help me identify my swing points. My swing points, I identify them by myself. So they're being identified by specific rules. Now I don't have to stay when I'm trading or when I'm looking for those swing points in the marketplace, I don't have to start looking at my rules because now it comes natural to me. So I can easily see the swing points in the marketplace. So without wasting much of your time, let's just jump straight right into the chat. So we're on video two, so we should be talking about swing points. So probably today I might do the other video, which is the market structure. So I might do this third video, which is my own market structure. So I don't know for now. I will try my best, but let's see how it goes. So, but I may stop here, and if I'm able to achieve video one, two, three in just the first week, that's very good, because in the next few weeks we should be done with all of this. So back to the chat. So I was talking about swing points. So let's go to now swing points. To me, we have two major swing points in the marketplace. We have the swing highs coming. So we have the swing highs and we have swing lows. So these are technically the two major swing points in the marketplace for me. Now, for the swing high, how do I really identify the swing high? Not for me, like once price is pushing up, for example, let's take for example, we have series of because for my chart, my bullish candles are the green ones. So let's say we have series of green candles moving to the upside. Take this out. So if we have series of green candle moving to the upside, then at the points in time, we then have a bearish candle coming into play, which in my own case, these are my red candles. So my green candles are my bullish candles, while my red candles are my bearish candles. So at the points where we have a pullback on that red candle, this literally forms a swing high. So the best way to identify this in the marketplace is through the line chart. So I'm going to get down to that when we get to start using candlesticks to identify the swing points. But for now, I'm just giving you the framework. So at the point in time when we have like this red candle pushes down, when it pushes down to the downside, this technically forms a swing high for me. So, and then we're going to see price. If price continues to maintain this bullish move, then we see price continue to move higher, which is printing new green candles moving higher and whereby breaking this high. So now this technically forms the swing low for me. So I know if you're not really new into trading, this should not be something complicated for you to understand and identify. So this should be something kind of simple and straightforward. So this technically forms the swing low for me. Now, vice versa when it comes to comes to bearish markets, we have price pushing down. In my own case, that would be red candles, and then we have at the point in time we had a green candle pushes up. So once we have a green candle pushing up, that forms technically forms a swing low for me. So this forms a swing low, and then price resumes or continues its movement down. So in this movement down, that forms a bearish candle, which would be in the form of, for me, that would be a red candle. So that forms a swing high, and this becomes the swing high. So just as simple as that, that's what my swing points are in the market. Nothing complicated, nothing hard to identify, just simple, straight forward to the points. So let's go down to the chart and let's see if we can get examples on that. So let's see this one. So as you can see, price is pushing up. Let's take for example here. So price is pushing up to the upside. Then we had a pullback. So once it forms that pullback, this technically forms a swing high for me. The highest point price got to was here. So this technically forms a swing high. And then we had price resume back its bullish movements. So this technically forms a swing low. So this is my swing high, while this is my swing low. Now, when it comes to the line chart, why do I talk about the line chart? It becomes easier and better when you switch on your line chart. So we all know what the meaning of swing is. Like this, let me see if I can get straight to Google. I mean, coming. So let's just sometimes I just like looking at Google. So what's the swing? So yeah. So swing move occurs to move back and front or from side to side while suspended on an axis. So the second definition, move by grasping the support from below and leaping. So it's kind of like a curve. That's what swing points literally mean. Like that's like the simple definition of swing points. Kind of like a curve when something curves. So that's when we can call it that something has really swinged or for the market, an example for the market, when we have a curve in the marketplace, we can call that a swing point. So now, as you can see down to the line charts, you can see there's the swing high. You can see the curve that forms a good curve to the downside. That's a swing high front. Then we had a swing or a curve to the upside that forms the swing low. This is not a swing. You can see this is not really a curve. This was just like a pause and then the continuation. So a curve must really show you that like it's really curved. For example, for looking at that should be something like this. So you want to see it's really defined. There's a curve, and this is also a curve. So here we have the curve where forms the swing high, forms the swing low. Yeah, I said there's no curve. There's no swing high, and now do we have a swing low? And if you go to the candlestick charts, we're able to see that there's no pause or there was no bearish candle that literally causes price to half to the downside or swing to the downside. No, but in this case here we have once price gets this is technically the highest point, and as you can see, price we had a curve, so this will form the swing high, and this was the lowest point, and this will form the swing low. So if you go down to the line chart, you're able to see that we have the curve, and then we have the curve. Now this is also a curve. So when it comes to the bearish market, this is just the vice versa. So for example, we have um we have series of examples, but let me just look for something unique. Mm, let's see. Kind of looking for something unique in a way. So there's no need going so far. So let's look at this. So we have like here we have the swing high where we have the curve. If you go to the line charts, You would see that that was a curve, and we have the curve, then a curve down, the curve up, and the curve down. So that's how you're able to identify swing points in the marketplace. So it's not something complicated. Like I said, if you're not really new into trading, this should not be something new to you. But I see, like I've given my own defined way of how to actually look for swing points in the marketplace. You can see I have like a defined approach, not just something I pick randomly or something I'm waiting for an indicator to actually identify for me. These are things I use well-defined approach to look for in the marketplace. So this is my own approach to finding swing points in the marketplace. So now, what does the swing points? What does really help us to do in the markets? Now, this swing point, without the swing points, we can't really identify market structures. So swing points also us to identify market structures. Like when it comes to market structure, when we're talking about the higher highs, higher lows, lower highs, and the lower lows. So these swing points help us to identify the market structure. This gives us a defined approach to identifying market structure because without swing points, price would just be in a straight point, and a straight point, for example, if you let's say you move into the chart and then we see something state like this there's no structure towards this market. This is just moving in one straight direction. Likewise, when we get back into the market and then we see a straight push downwards, there's no structure here, and likewise there's no structure here. Now for a market structure to be formed for this straight push, we would like to see something like this. So forgive my drawing, just trying to make it quick. So you can see here we have like this swing high, swing low, swing high, swing low, swing high, swing low. So you can see how the swing points helps us to form and identify market structure in the on the market. So yeah, likewise when it comes to being bearish, forms the swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. So as you can see, these swing structures or swing points helps us to identify and form the market structure. So without swing points, there's no market structure. So you really need those swing points to be able to identify market structures. So for example, like here, you can see we had like a straight price downwards. Yeah, there's no market structure. Perhaps if you go down to the lower time frame, there'll be market structure. But on this time frame, there's no market structure to this price because this was just moving straight down. If you go, yeah, as you can see. So that was just a straight push. So there's no market structure. So we really need the swing points. As you can see, we have the swing points here, a swing point here, a swing point here, a swing point here. This stuff forming market structure for me. So my own like the strategy I'm teaching you is just based on market structure one, like 80% of the time or 90% is I focus just on market structure. So this is like the first actual lecture on this free course. So probably today I may move or I may teach the market structure, which will be the next thing on the list. So we're done with the swing point for now. So I might be talking about market structure next. And if I'm able to actually record the market structure today, that might be it for today, like for this week. So then before I start recording the new ones, which is going to be liquidity, point of interest, and what's time for utilization. We'll be looking into this new week. We'll just move into that's when I might be able to actually talk on these topics. So this one's might like this all of these lectures here might take a little bit more time to cover up and a little bit more time from you to understand. So as just going to any of these lectures and feel that you just need to watch twins and that's it. So you need these are things you need to watch over and over and over again. The reason why you have to watch it over and over again so that you can understand what I'm trying to talk about. Because without you really need that understanding, it's very, very crucial and vital. So you really need that understanding. So you really need to understand what I'm talking about. When it comes to swing point, also you have to also understand. You have to watch it more than one times to really understand what I'm talking about. When it comes to the market structure, you have to watch it more than one times. Yes, my own market structure deals with the basic higher lows, high highs, but during the process of this, we're going to be talking about specific things that you won't really find outside on YouTube. So we're going to be talking about specific things that really helps me understand market structure better, and you will be able to understand why I always talk about market structure over and over and over and over again. So that will be it for this particular lecture and topic, which is swing points. So until then, stay safe and have a good weekend. Bye bye.